Are we on the verge of a market crash? Let's take a look at the data and see what it says so you can make a more informed decision if you're considering buying or selling a property. This is a map of overvalued areas in the nation. What that means is people's local incomes don't match up to the home prices. Something that's kind of interesting is back in 2007, the overvalued areas were the areas that experienced the market crash. California and the Northeast coast. Today, those areas are no longer overvalued. The current areas that are overvalued are the areas that had an influx of people because of COVID. When COVID hit, a lot of places shut down, and people in those areas wanted to be able to continue to operate businesses and move about as normal, so they moved. They moved to areas like Texas and Florida, and apparently Boise, Idaho. I don't know much about Boise, but if you're from Boise, can you tell me why you're the most overvalued area in the entire nation? What's going on in Boise, Idaho? Other than that, you have Las Vegas and Arizona as well. Those two areas did experience a massive market crash in 2007. They had way too much building going on. And now here they are again, overvalued again, hanging out with us Texans. We're overvalued too, along with Florida. So these areas are the most prime areas for potential crash if a crash occurs. We don't know what's occurring right now because real estate data lags. Let me explain that to you. This is a chart of my local sales price median in the Dallas-Fort Worth area of Texas. And what I mean by data lags in real estate, you'll notice the April data just arrived. We're in the middle of May. April data is really March data. This is the closings in April, which went under contract in March. So this data is 2 months old. So everything you're seeing when it comes to real estate data is historical. By the time a crash occurs, it's already passed and done. A lot can happen in 2 months. Because real estate data lags, I find it important to reach out to every single agent I know to find out what's going on in their particular business to see if they're experiencing what I'm experiencing, which is less showings, less offers, more time on market. So if you would comment down below, let me know where you're located and if that's what you're experiencing or not. On the note of days on market, let's take a look at what's going on there. So currently, or I say currently, 2 months ago, the average days on market was 6 days on market. Homes were practically flying off the shelf. If they were nice, they were gone within a weekend. That's been pretty normal last year, but it wasn't normal historically. When we go back to when home prices were stable, they weren't going up or down, average days on market were about 50. And so even if a home would sit on the market for close to 2 months, the home prices weren't going down, they were just hanging out. So if you're a seller and you're hanging out, there's no real reason to get too distraught yet, because even if your home sits on the market for months, it could actually still sell for what you're asking for. In fact, during the appreciation market, when it was still appreciating about 5% per year, homes were sitting on the market for 30 days. That's a normal market where you have one buyer, one seller, and you negotiate. We were seeing some multiple offer situations in this case, but it wasn't the normal. It was a little less common. Obviously, it's going to happen in little hot pockets. On that note, we still have hot pockets. I'm still having homes that have multiple offers, buyers just competing left and right. We're going to see that, especially in the first-time home buyer market, lower price point. There's just more buyers. So even if there's less of them, there's still a lot of them. I think we're going to start seeing a lot of areas that are experiencing growth or decline before the whole market has an effect. One area to keep an eye on are going to be areas of speculation. Parts of town that aren't necessarily the nicest, where maybe people are tearing down some older homes and building brand new homes, or neighborhoods that are just kind of speculating and you've got a lot of updating going on and price improvements. Those areas could be impacted first. And the reason for that is because a lot of these speculative buyers are going to get scared with all this talk of market crash, because that's what's happening right now. There's been talk of market crash for years, but the voices are getting louder. And you're getting more voices of things like recession, and there's the interest rates going up and the stock market crashing. And so there's a lot going on right now that could potentially create the perfect storm. But we don't have that data yet, because this is real estate and real estate data lags. So we definitely want to keep an eye on areas of speculation. Those areas could be first. So why have we been seeing this massive market price increases? Well, there's three main things that are occurring. Number one is we've had really low interest rates for the last couple of years. I don't know if you've noticed, but there's a lot of institutional investors that have come out of the woodworks that are just buying up anything and everything. They're putting offers out there on every property because they want to scoop up whatever they can while the money's cheap. And so when the rates drop to historic lows, not only were buyers that were already living there buying, but you also have a ton more investors trying to scoop up everything. And then you have people moving because of COVID. And so you have people moving to certain areas and buying. You have the investors buying in those areas, and you have people moving because they got a job change or a promotion or whatever. And with the talk of interest rates rising, there was all of a sudden this race to buy before the interest rates get too high. So everyone's just racing to the market to get in, get the cheap money while they still can. And we just had the biggest interest rate hike in the last 22 years. And we're not stopping the hikes. They're talking about raising the interest rates again. So has the race ended? Have we hit the finish line where people are no longer racing to get in before the interest rates get hiked? Has that happened? Are they done? Let me know what you're experiencing in your market. I want to know where you're located and what you're seeing. Interest rates obviously affect buying power, but so does the stock market. Not everyone owns stock, but a lot of people do. When the stock market goes down, you have less money. You have less buying power to put on your down payment. And on top of that, a lot of people don't like to sell when the stock market's down. So they don't really want to pull their cash out and put it in a home. You know, the whole idea is to buy low and sell high. And all year long, the stock market's been going down, except for this little rebound. There's a couple of rebounds. One of them occurred in March. Everything kind of interacts. So you got to take a look at all data to figure out what's possibly going to happen in the future, or actually what's happening right now, because we have no data on it. This isn't the stock market where we get data every minute. This is the real estate market where we get data every month. Now, one argument I've heard is that we don't have enough building going on to have a market crash. There was all this building occurring before 2007, and that has not recovered. So let's look at that chart. Now, this is the housing construction trends chart. And so you can see that building has been picking up. There was a little dip when COVID hit and there was a massive supply chain issue, but it didn't really seem to stop the builders. They're still building. And one thing that's very interesting to me about builders is they stopped building before the market crash of 2007. You notice they stopped building kind of right when 2006 hit. So it's almost like they saw the crash before it happened. So I really want to watch what builders do. And on that note, if you have a home in an area of gentrification where builders are buying a lot of the properties in your neighborhood, stop buying the properties in your neighborhood. That could be a bad sign that something's happening because builders are very risk averse. They foresee a potential market crash. They're not going to start building something that's going to take 6 months to a year to complete and be worth so much less money. And so they might not take that risk. And so if they're the ones buying in your neighborhood and they stop buying, there's a problem. That's why there's going to be pockets that have bigger impacts than others. So if you're thinking of selling, this is an excellent time to sell. This summer could potentially be the best time to sell for the foreseeable future. There's 3 options that are occurring right now. Number 1 is market appreciation is slowing down. This is your worst case scenario. If it's slowing down, you're missing out on some appreciation, but you're still selling towards the top. So it's not that bad. Option 2 is the market has stalled and we are at the top. This is best case scenario. You're getting the most amount of money possible for your home. And option number 3 is we are experiencing a market crash and we don't even know it yet. And the peak has already occurred. And so you missed out on that, but you're still catching it towards the top. So you're in good shape. Now, if you're a buyer, what should you be doing? Well, if you're an FHA or VA buyer, this could be a great time to buy because now you actually can buy. You haven't been able to buy in years because you're getting beat out by all these cash offers and investors. Now, on that note, if you're still trying to buy in a hot market, like a first-time home buyer market, you still could have a problem buying because there's still lots of offers and that market's still going to appreciate, in my opinion. So you might want to look at some of these awesome programs that mask your VA or FHA loan with a cash offer. There's multiple companies that are doing this now. So if your agent isn't helping you out with that, ask about that. If you don't have an agent, reach out to me. Happy to help you anywhere in the world, whether you're looking to buy, sell, or invest in real estate. Let's chat.